If you are self-employed or landlords, a major change coming to how business owners and landlords report their income. This is called making tax digital. I will explain today what MTD for income tax is, who needs to comply, key dates, and how to prepare so you can avoid penalties. By the end of this video, you will know exactly what steps to take to stay compliant and even turn these changes into an advantage for your business. By the way, if you are new here, my name is Rubina and I am a qualified accountant with over 20 plus years professional experience in accountancy and tax planning matters. What is MTD for income tax? Making tax digital for income tax, also called MTD for ITSA, is a new system from HMRC that requires businesses and landlords to keep digital records and send quarterly updates of their income and expenses to HMRC. In other words, paper records and annual tax forms will be replaced by frequent digital submissions using compatible software. This is part of HMRC's drive to modernize the tax system following the rollout of MTD for VAT. Under MTD for income tax, instead of filing one big self-assessment return at the end of the year, you will submit updates every 3 months through a software. Don't worry, these quarterly updates are simple summaries of your income and expenses, not full tax returns. Then, at the end of the year, you will finalize everything with an annual declaration similar to the current year-end process. Why is HMRC doing this? The goal is to make tax administration easier and more accurate. By keeping digital records and reporting in real time, errors can be reduced and you get a more up-to-date view of your tax position. HMRC found that a lot of tax mistakes happen with manual record keeping. Digital updates mean less chance of typos or lost paperwork, and your business numbers will be automatically added up by software, ensuring you get your tax right with fewer mistakes. It also means HMRC will have a more timely picture of your business, which they say will lead to a better service and more accurate tax assessments for everyone. In summary, MTD for income tax is equal to digital record keeping plus quarterly submissions via software. It is a big change from the old annual tax return, but it aims to simplify and streamline the process in the long run. Key deadlines and who must join. Now let us talk about who needs to join MTD for income tax and when. The government has set phased deadlines over the next few years. April 6, 2026, income over £50,000. If you are self-employed or a landlord and your total business and a property income is above £50,000 per year, you will be required to follow MTD for income tax from April 2026. Essentially, this means the tax year starting April 6, 2026 will be the first where your quarterly digital updates are mandatory for that income group. April 6, 2027, income over £30,000. 1 year later, from April 2027, MTD for income tax will also become mandatory for those with annual business property income above £30,000. So if your earnings are in the £30,000 to £50,000 range, you have an extra year to prepare, but you will need to comply by the 2027 tax year. Future expansion. The government has indicated plans to eventually bring in those with income above £20,000 in a later phase by the end of the current parliament. However, no fixed date is set for this group yet. Current parliament likely means around 2028. If your income is below £30,000, MTD rules won't affect you until at least that later phase. And HMRC is reviewing how to make it work best for smaller businesses. It is important to note that these thresholds, £50,000 to £30,000, refer to your gross self-employed and rental income, not your profit. If you have multiple businesses or a mix of self-employment and property income, HMRC will look at the total combined income from those sources. They call it MTD qualifying income. If the total exceeds the threshold, you are in the scope for MTD for income tax. So check your numbers. If your business or rental income is over £50,000, you have until April 2026 to get ready. If over £30,000 but not above 50K, you have until 2027. Mark those dates on your calendar now. What you need to do to comply. With the deadlines on the horizon, how can you make sure you are ready for MTD for income tax? Key steps business owners need to take. Use MTD-compatible software. You will need to keep your records in a digital format and use software that can connect to HMRC. Spreadsheets alone won't be enough unless bridged with approved software. HMRC has a list of MTD-compatible software providers on their website. This includes many popular accounting apps. Choose a software that suits your business needs. Make sure to set it up with your business details before the MTD start date. Keep digital records continuously. Start recording all your income and expenses digitally in that software. This means either invoice and bookkeeping within the app or regularly transferring info from your spreadsheets, bank statements into the software. The goal is that your books are up to date each quarter so you can send HMRC an accurate summary. Under MTD, paper receipts in a shoebox are a thing of the past. You will want to snap photos of receipts or import expenses electronically as you go. Send quarterly updates. Every 3 months, you will use your software to send a quick update to HMRC with your income and expenses totals for that quarter. The software will usually prompt you when it is time, 4 times a year. These updates are essentially a new obligation in addition to the year-end filing. HMRC declares quarterly updates simple. You are not doing a full tax calculation each time, just reporting the figures. Think of it like filing 4 mini returns spread across the year, which leads to more timely information. End of year finalization. After the 4th quarter, you will still make a final annual submission, sometimes called a final declaration, to confirm all your data for the year and add any other personal income or adjustments like reliefs, allowances that were not in the quarterly updates. This final step is similar to the current self-assessment, but if you kept up with your digital records earlier, it should be much simpler since most info is already in HMRC's system. Register and sign up on time. When your turnover hits the threshold or by the year before mandatory, you will need to formally sign up for MTD for income tax on HMRC's system, likely via your government gateway account or through your software. HMRC will probably open sign-ups ahead of the deadlines. If you use an accountant or tax agent, they can also help get you signed up. Don't leave this until the last minute. Give yourself a few months cushion to iron out any software kinks. In short, get a compatible software, use it for all record keeping, and be prepared to send HMRC updates every quarter. This may require some adjustments to your routine, but many businesses have already adopted to digital bookkeeping, especially with MTD for VAT. So MTD for income tax is the next step. Benefits of going digital. Why MTD can help you. MTD might sound like extra work, but it actually comes with several benefits for you as a business owner. Reduced errors. As mentioned, digital record keeping and direct data submission mean fewer mistakes. The software does the calculations and helps catch common errors. HMRC expects this to significantly cut down on typos or forgotten income that often happen with manual tax returns. In fact, HMRC research shows millions of pounds of tax gap are due to avoidable errors. MTD aims to fix that. Less errors also means less risk of HMRC inquiries or corrections later. Real-time tax insights. Instead of waiting until year-end to see your tax bill, you will get quarterly snapshots of your income and likely tax owed. This provides real-time insights into how your business is doing financially. With up-to-date information, you can make better business decisions. Like by quarter 3, you might see you are approaching a higher tax band or the next VAT threshold, allowing you to plan accordingly. HMRC notes that clients using digital bookkeeping now have significantly more up-to-date financial information and can make better business decisions as a result. Simplified year-end process. Submitting information throughout the year means no last-minute rush each January. Many business owners know the stress of the self-assessment deadline under MTD because you have been gradually reporting. The final submission should be more of a confirmation than a giant form filling task. This spread out workload can simplify compliance. Also, your records are all in the software, which can produce the final figures with a few clicks. Better organization is equal to time saved. Moving to a digital system can actually streamline your bookkeeping. Think of it as an upgrade. No more shuffling through piles of receipts or manually totaling things up. Everything is recorded as you go, and many softwares can even integrate with your bank to pull in transactions automatically. Over time, this can save you or your bookkeeper a lot of time, which is more time to focus on your business rather than paperwork. Avoiding penalties. Perhaps one of the biggest motivators. By complying with MTD, you will avoid the new penalties that HMRC will enforce for non-compliance. Missing a quarterly update or filing late could soon incur penalty points. We will cover the new system in the next video. By staying on top of the digital updates, you keep a clean record and no surprise fines. The whole point of MTD is to make compliance easier. If you embrace it, you should not fear penalties at all. Better support and experience. HMRC is modernizing their systems alongside MTD. All your tax info will move on to a new system that is more integrated and joined up than the old self-assessment system. This could mean faster processing, better access to information, and more responsive service. HMRC also plans to provide helpful nudges and prompts through software. These benefits show that MTD is not just about ticking a compliance box. It can give you more control and clarity over your finances. Many early adopters of MTD for VAT have found that using digital tools actually help them run their business more efficiently. With the income tax rollout, you have an opportunity to do the same. To wrap up, making tax digital for income tax is coming, and it will change the way we all do taxes in the UK. April 2026 and 2027 for others may seem far off, but preparation is key. Now you know what MTD for income tax entails, keeping digital records and quarterly reporting, and you have the timeline of who needs to join when. By acting early, choosing the right software, and perhaps joining the pilot, you can turn these compliance requirements into an opportunity to modernize your business finances. Remember the benefits: few errors, better insights into your tax obligations, smoother tax seasons, and no nasty surprises from HMRC. In the next video, I will let you know about joining the pilot program and the new penalty system. That might sound strict, but it won't be an issue if you are organized and compliant. This channel is all about helping you stay informed and compliant so you can focus on growing your business without worry of fines or last-minute tax panic. Thank you for watching. If you found this information helpful, give us a thumbs up and consider subscribing for more updates on UK business finance and taxes. Drop any questions you have about making tax digital in the comments to navigate these changes. Stay proactive, stay compliant, and until next time, happy bookkeeping.